Welcome everyone back to the Liquid FX YouTube channel. So we were previously Liquid FX, now we're Price Action Lab. So we're going to be focusing on how you can combine ICT with order flow and how trading with candlesticks alone is essentially like trading blind, right? So if we just head on with this PowerPoint. Now, what do we mean by this, right? Is buying and selling is what ultimately moves the financial markets, be it the S&P 500, be it the Nasdaq or US 30. So the serious people, the serious traders use order flow to their advantage with ICT. And this is what we're going to be going over in this video. Right, so the learning objectives of today, what I want people to understand and take away from this video is understanding footprint charts and why they are absolutely necessary in your trading. Now, the footprint charts give us some data, and the data is the bid and ask. So we're going to be looking at what the bid is and what the ask is. We're going to be looking at delta and volume profiles, and we're going to be looking at key levels. Now, there's two types of key levels. We have demand zones and we have supply zones, and we're going to be going over that in more detail as we break down the charts. So if we look at the delta, we're going to be breaking this down in the charts, right? When you have a positive delta, when we have a blue delta, we're going to go into the footprint chart and explain this. When you have a blue delta or a positive delta, this represents that more market participants have hit the ask, right? So that's aggressive buying. Now, negative delta is exactly the same, but for aggressive selling. So when you see a red delta, this represents more market participants hit the bid than the ask. So there's more aggressive sellers at that specific price. Now, delta alone does not tell you the full story. You need to use supply and demand zones, you need to use volume, you need to understand absorption, exhaustion, auction finishes, all these things which we're going to be going over in this video. So delta alone does not tell you the full story. I want to make that very, very clear. So the volume, very important to understand. For every transaction, there is a buyer and a seller. So there's no such thing as more buyers than sellers for a given price for a given transaction. That's not the case. For every buyer, there is a seller. We're going to be understanding the interactions between these two market participants. Who is aggressive? Who is passive? Where is the volume high and where is the volume low? Just as a heads up, when we see low volume, that means that the transactions are low, which means that buyers and sellers do not agree that that particular stock or instrument is at a fair price. And that's what leads to large rallies up or down in the market. The bid and the ask. So when market participants hit the bid, this is aggressive selling. When they hit the ask, it is aggressive buying, right? So buying and selling is what moves the market. Aggressive buying moves the stock price up, and aggressive selling will move the stock or instruments pricing down. So everything is an auction. The market is an auction. Okay, so we're now going to be using this information on the charts to give us a significant edge in the markets. So when it comes to using footprint charts, the main thing to understand is that price action on the candlestick chart will give us a massive indication as to when we use footprint charts, right? So this is SPY, so the S&P 500 options contract, and we're going to be going over some basic price action analysis and some tips as to how you can use this to your overall advantage, right? So if we just start over here, right, we understand we have a fair value gap over here, right? So we see an inefficiency or a fair value gap, and we see a structure break. So this is now Monday, the 26th of August, right? So Monday, the 26th of August, we had a very clear supply zone over here. So this is the key level in the market, right? So notice how everything we do occurs at key levels. This is very important to understand, right? We have a key level over here, right? And we also have a second key level just over here. So this is kind of our supply chain, right? This is a bit of a supply chain forming. We see supply taking control of demand at these levels, right? So if I just replay price, we're going to be going over the price action of 30th of August 2024. So this is the price action that was currently for this week going into Friday, the previous day, right? So just a couple of things, couple of notes. Let's head down to the 5 minute time frame, right? So this is pre-market open, right? So this is now 9:25 Eastern time. This is so a couple of things to notice. We've had a gap up day, very important to understand, right? We've had a gap up day, right? We also have the low from Thursday, the low from Thursday down here, which hasn't currently produced any new highs, right? So this is a weak structural low. So let's understand our overall drawn liquidity, right? This is where ICT kind of meets order flow, and this is what I want people to understand. This is our DOL, or our draw of liquidity, and the reason why is because it is the low of the day. It is a major liquidity pool. So now let's head down to the 1 minute time frame. So this is the S&P 500 options. This is our key level. This is our supply zone, right? So if I continue to play price on, what we're looking for is for price to come into our key level. So now we see price come into our key level. So when price comes into our key level, we are now looking at the order flow, right? So the order flow here on the footprint charts. So let's analyze now the footprint charts to see the data that we have in front of us, right? So here we have the S&P, well, this is actually ES, sorry, so S&P 500 futures, right? So we're using the order flow on ES to validate our overall trade, right? So this doesn't have a replay mode, which is absolutely fine, but we're understanding how price comes into our supply. So this candle over here, this price action over here on the 1 minute directly corresponds to this price action. So this is now 9:42 a.m. Eastern time. We're now going to analyze the order flow on ES, right? So we're looking at the overall order flow on ES. So let's quickly zoom into the candles and see what we get, right? So this is where the interaction between buyers and sellers becomes very important. And we're going to be roughly breaking this down, right, as to how you could have taken today's sell trade. Sorry, yesterday's sell trade. So the first thing to understand is that as we come into this zone, we want to see aggressive buying. Now, how do we see aggressive buying on this particular chart, right? On this order flow chart. Now, we have red delta and we have blue delta. So quite self-explanatory. At the start of the video, I suggest people rewind back. You had negative delta and positive delta, right? So the positive delta represents more aggressive buying and the negative delta represents more aggressive selling. So when we see lots of positive delta at this supply zone, what does that indicate, right? So we see price aggressively buying into this zone, right? So we see aggressive buyers over here. So this is through the positive delta, right? So the positive delta shows aggressive buying. I'll just write AGG for short, right? This is aggressive buying. Now, when we see aggressive buying at a supply zone, right? What we want to see is, are these aggressive buyers being rewarded? So at the moment, we had this large drop down, we had this large rally down, right? So when we bring up the footprint chart's actually indicating that there is a lot of aggressive buyers, right, in this region. There's a lot of aggressive buyers over here which are not being rewarded, right? Those aggressive buyers are not being rewarded, and price eventually heads down. You need to understand this as well. When we're looking at order flow, you want to be reading the individual numbers, right? Look, we have 35 for 106. So what that's telling you is that we have 35 market participants hitting the bid, and we have 106 market participants hitting the ask, right? So we have a lot more aggressive buying and selling in this region, and we can see that through the blue delta. The blue delta indicates aggressive buying. We see a lot of aggressive buying at this zone, right? Notice how from here we have a 0 and a 5. So we have a 0 at the top and we also have a 0 and a 7. So when we see a 0 on one side of the transaction, so we see 0 market participants hitting the bid, which means that there are no aggressive sellers, sorry. So when there's no aggressive sellers and we see price eventually move down over here, so we see a move down in price. Now that move down corresponds to this move down over here. This gives us indication that our supply zone may actually hold, supply zone may be in control, supply may be in control, the sellers may be in control, and that shows us that we could be looking for potential short trades, which is how this trade was actually, how this trade panned out, sorry. So we're seeing a positive delta and we're seeing aggressive buying that's currently not being rewarded, right? Not rewarded, right? So this shows you that supply is currently strong. So in a technical terminology, it shows us that there is passive sellers sitting there, right? There's passive sellers sitting there. So when we have lots of aggressive buying and it's not being rewarded, what we need to understand is that there's passive sellers sitting here in this zone. And this is what's really important. So I'm going to just explain that one more time. As price drives into a zone, if there's lots of aggressive buying in this region, but price cannot actually follow through and head higher, this shows us that there is a passive buyer sitting over here. Sorry, passive seller. There is a passive seller that is selling to those aggressive buyers, right? It's selling to those aggressive buyers, and it's what's causing that strong supply zone that we eventually look to take sells from. Okay, so if I just continue to play price on, let's see what we end up getting, right? So now from here, price comes and retests our supply zone, right? So from here now we have a bullish inefficiency. This is where the ICT comes into play. We have a bullish inefficiency just over here. So now we have an interesting region, right? This is where patience really comes in. The psychology of trading is still here, right? Psychology is not gone anywhere despite having an amazing strategy. We have a bullish fair value gap over here, and we're seeing that rejection. When you see a wick, right, there's a lot of aggressive buyers in this zone, but they're being absorbed by passive sellers. Okay, so let's continue to play price on. Now we get the same exact thing again. So we need to understand what's happening over here. So this is now 10 a.m. Eastern. Let's bring up the footprint chart and see the overall price action, right? So sorry if I just bring this up again. Price eventually rallies into our zone, right? So we see price kind of rallying into our zone again. We see another aggressive rally, right? So this is where we see the aggressive rally. Now from here, we see actually the same thing again, right? We see the exact same thing again. And this is what's very important to understand. We see a 0 and a 9, right? Let's start over here. We see 0 and 77, which shows that there's no aggressive selling and there's only aggressive buying. So when we only see aggressive buying and we don't see a follow through of higher prices, that indicates our level is a strong level of supply. And that really gives us validation to look for sells, right? So again, we see 0 for 9. So we see an auction wipeout. This is a finished auction because we see a 0 on one side. Now look at how we see 53 by 100 by 222. So that shows you that there's an approximate 4-to-1 ratio. There's 4 times as many market participants hitting the ask than the bid. So there's a lot more aggressive buying than selling at this zone, right? Now from here, notice how we see a slight drop in the volume and we see a drop on the volume over here before we ultimately see lower prices. So what we've seen two tests into this zone, right? We've seen two tests into this zone. All this over here was aggressive buying that was not being rewarded, right? So this means two things. It's buyer absorption, right? Buyer absorption. So the buyers are being absorbed by a passive seller. We see a finished auction. And after a finished auction, we're now looking for a volume decrease, right? We saw the volume decrease, right? So let's go back to the footprint chart and understand. We saw the volume decrease over here. Look at this candle, right? Let's understand we have the delta profile, but we also have the volume profile, right? So understand once we've had that aggressive buying that wasn't being rewarded, the volume here massively decreases, right? So when we see a volume decrease over here in this region, the volume decrease means that buyers and sellers are not interested in that particular price for, in this case, the S&P 500. It shows that they're not accepting that price. They do not think it's a fair price to be trading at. Okay, so once we've seen that buyer absorption and we've seen the finished auction, we now want to assess price at this demand zone, which is where patience really comes in, right? So let's quickly speed up our video to see what we actually end up getting, right? So price comes into this zone and we get another test over here. So this test is what I've just broken down on the footprint chart, right? So this here was the ultimate drop in price, right? This was a large drop in price. We've had aggressive buyers that were not rewarded. Very important. Aggressive buyers that were not rewarded. A decrease in volume. And now we've come down into our level. This is our demand level. So we look at the same thing, right? And now we're looking at it from the exact opposite side. So now notice how we have a lot of red delta, aggressive sellers coming in, even over here, red delta, aggressive sellers coming in, right? Despite aggressive selling, the market actually found a reason to rebound, right? So now from here, price comes back into our level, right? So now price comes back into our level. Over here, we had those passive buyers, right? We saw these passive buyers step in, right? So we had a lot of aggressive selling over here, but the market went up. When you have a lot of aggressive selling, it shows that there are passive buyers sitting over here, right? So there's passive buyers, okay? And now over here, we see there's passive sellers, right? Passive sellers. Now it's kind of a tug of war between passive buyers and passive sellers, right? At the moment, we see passive sellers selling to the aggressive buyers over here. So this supply zone is actually a solid zone. So now let's continue to play price on and see what we get. Now, again, those passive buyers show up, right? Those passive buyers showed up over here. If we analyze what happens just before 4 p.m. UK time, which is just before 11 p.m., 11 a.m. New York time, right? As price comes into our supply area, right? Price comes into our supply area. Let's notice once again, right? We get 84 for 37, we get 0 for 2. So notice how the auctions are being wiped out, right? So we see aggressive buyers that are not being rewarded. I've repeated that so many times because I want traders to understand, right? The auctions are being wiped out. Aggressive buyers are not being rewarded. The supply zone has had multiple rejections, and this is what gives us our signal to buy, right? So, sorry, to sell. So as price comes back down into this zone, right, we now get met with a lot of aggressive selling, which shows us that these passive buyers that showed up over here, are no longer present. And that's what gives you an indication to take your sell, right? So you can enter, and I like to enter just below this kind of candle over here. Stop loss above the inefficiency over here. And now from here, if we head over to the 15-minute time frame, you can really see that the potential is all the way down to the previous day low, right? The draw on liquidity, which is the first thing we targeted, right? So from here now, that's now a 3.6 R trade. So a fantastic risk to reward multiple if you can understand the draw on liquidity. This is very important to understand, right? So let's break this down one more time, right? So we understood using footprint charts that we had a massive passive seller over here, right? We had a passive seller, or we had multiple passive sellers that were absorbing the aggressive buying, which the footprint chart indicated to us. We saw the same thing over here, right? So we saw aggressive selling come down. So let's mark this down. We saw aggressive sellers not be rewarded. So there was a passive buyer that showed up here. Again, over here, there was a passive buyer that showed up here. Now, did those same passive buyers show up over here? Well, let's see. They didn't, right? They didn't, right? The footprint chart gives you the indication that these passive buyers are no longer there. Supply is holding. Supply is held here, 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 and here. When supply is holding, we see passive sellers that are in control. Aggressive buyers are not being rewarded. This is what gives us our indication to look for our sell, right? So this was a great sell that eventually took place. There was a second re-entry over here, right? So notice how price came back and retested this supply. So this was a second potential entry you could have taken. Stop loss just above the supply. So these were two entries that I personally took on the S&P 500, not on SPY. I don't trade options just yet. So this is a trade that you could have perhaps taken, right? So again, it shows you the power of risk to reward once you have price heading in your favor, right? So we had two trades played out in our favor. And the main thing you want to understand is the order flow behind these trades and why they were taken, right? The order flow is what gives you your validation to your key levels, right? So it's understanding what's happening over here, right? What's happening over here is you're seeing, let's quickly go over this one more time. You're seeing aggressive buyers not being rewarded. The volume dries out, which shows that the market participants, buyers and sellers, are not interested in these prices. This is around 56.42 area on ES. And then from here, we ultimately get our drop in price. So this is how you can combine ICT with order flow to your advantage.